Greetings from Sprott Money News, SprottMoney.com. We've come to the end of the month of January, if you can believe that. We got 1 month of 2025 already in the books. So it's time to wrap it up. This is your monthly wrap up. I'm your host, Craig Hemke, and joining us is my good longtime friend, Chris Marcus, Arcadia Economics, a very popular YouTube channel. He does great work and is somebody you should follow, not only on YouTube, but on Twitter. Chris, always good to see you.
Greg, great to be back here with you today, and I'm honored, especially at the beginning of the year. I know you mentioned that the White House is opening up applications for a press pass, so before you take it to the next level, fun to be here with you, and a lot happening right now in gold and silver, certainly.
Chris is mentioning it. They have a new thing at the Trump White House where just about anybody with a blog or a website can apply. If I'll let you know if somehow
I'd say we get you in the Fed press conference before the end of the Trump administration.
That would be even better. Hey, just remind everybody before we get started, we are at the end of the month of January, so it's time start thinking about tax planning. It's never any fun. However, make sure you keep in mind Sprott Money when it comes to your RRSP. You can download a free investor's guide to discover the benefits of adding physical gold and physical silver to your RRSP up in Canada and follow a step-by-step blueprint to get started. You want some personalized advice? You don't want to just do this online? You can book a consultation with a Sprott Money expert today. There is a link in the description. You can call them up at 888-861-0775. All kinds of helpful stuff always at SprottMoney.com. All right, so Chris, what a month we've had. Now, I don't want to get too overwhelmed. We had a really good start to the year in both gold and silver, but it is January, I think the second strongest, historically strong month from a seasonal standpoint. So, you can usually expect to have a good month. We had a really good one. But man, there's a lot going on underneath the surface, it seems. That is continuing here to the end of the month. So I'm just going to kind of open it up at that with you because you've done a lot of great work on your channel this month, getting to the bottom of how maybe these potential tariffs are impacting the physical gold and silver markets. What's on your mind as this month comes to an end?
Yeah, well, obviously what we're seeing around the tariffs and seeing that actually play out in the EFP market, which I think most people have heard about by now, but basically the difference between the London spot market and the futures in New York, which has widened out as there's concern about how are these tariffs going to impact the metals. Yet, if you take a little bit of a step back, even before that started, Craig, go back to election night. Just like in 2016, we were starting to see gold and silver sell off. People are getting concerned about the tariffs. I think that was right around when you and I talked, and I think we agreed that, well, if we actually do have tariffs and Doge board, you may well have a higher deficit than smaller by the time that's all said and done. So it wasn't the easiest couple of weeks there for the metals, yet here we are. I guess as of today's pricing, we're back. I think we're in the positive on both. Gold touching 2,800. So this is even with the tariff policy, dollar index still up 8% since the Fed started cutting. Now you have stress in the gold and silver markets as a lot of metal has been coming from London into New York, and we're seeing multiple reports now of concerns of available metal in London. We saw that obviously evidence through the EFP, and we've seen the metal go into the COMEX. And as you mentioned before we started recording today, this morning, there was a note from Financial Times saying the Bank of England, normally it took days to withdraw your gold. Now we're up to 4 to 8 weeks. And where does that leave us? Are we about to see the gold and silver markets break and explode to extraordinary new highs? I don't know that I would say that's the case just yet, but what is interesting is that this is happening in the context of already a silver deficit. And as many people may have seen in some of these Bloomberg articles, they've quoted Daniel Gali from TD Securities quite a bit, who's talked about the pressures that are building here and the challenges that are rising. This is also the same guy that last year wrote a report saying how he's expecting the next silver squeeze, and he talked about the declining inventories. So it was already a little bit of a fragile situation. And then I might add, I know think when you were on my show a couple of weeks ago, we talked about this, but in case anyone has not seen this yet, I talked with Rick Rule about a month ago where he went into what happened and what he saw during Silver Squeeze, how they cleared out the silver inventory in multiple cities, and how had the pressure on the retail market continued, he thinks it would have broken back then. Retail stackers slowed down, but Rick was still left and mentioned multiple times he sees this still as a matter of when rather than if, when we see a mismatch. So it's a delicate environment. Now you're putting some policies that are increasing the volatility. We're seeing that even before the tariffs have been implemented, let alone we have Doge board coming up, and we'll find out more about that. But certainly, I would say in and of itself, maybe I wouldn't be expecting the EFP to have perhaps the impact that many of us silver investors hope will one day be what we see. Yet, could that trigger a bigger issue in terms of some of the things that were already existing? Obviously, the pressure is building on that. We're seeing signs of it now, and certainly a fascinating time in the start of the new administration.
Chris, we've discussed this for years about if we can get enough physical demand, and I mean, it's obviously coming at the central bank level too for gold, that would really stress this kind of just-in-time supply chain issue, if you will, where trades that are settled in London at the futures price, they got to be able to flow metal there. And to have the Financial Times of London, I mean, the pink newspaper, right? The veritable Financial Times, write about how there are now 4 to 8 week delivery delays for gold. Now, again, that can get resolved, all right? However, this is the kind of thing we've talked about. I mean, you have an unallocated account or you're a purchase that you're waiting on, and they're giving you 4 to 8 weeks. They are telling you there is a serious problem, at least currently on the supply side. Again, we don't want to get too far ahead of ourselves. But as you mentioned, with the silver supply deficit, we know what's going on with gold. I mean, I don't know. Could it be the year that it all starts to crumble?
Well, Craig, in there you mentioned that what we're seeing with the Bank of England, it could get resolved. It's also possible that it doesn't get resolved. What if the Reserve Bank of India says, actually, we want to repatriate some more of our gold,
right?
Or we want to continue adding to our holdings. Or we've seen the central banks over the past 3 years set records for the amount of gold they've purchased. I don't know. What if they purchase more this year? I mean, when you look at what's happening, Trump told countries, if you de-dollarize, we're going to kick you out. India, a little bit on the fence of how they feel. They don't want to lose access to the West. What do they did? Well, they don't call it de-dollarizing, but they're buying gold. So, I try to be careful to phrase things. I don't want to give people the idea like, hey, this is going to explode tomorrow. But you're certainly in an environment where there's a lot of volatility and, one or two things goes the wrong direction. You could have a problem. Do we know that that's going to be the case yet? Well, we're seeing a little bit of a problem now, but like you pointed out, things can come back in, or there's a lot of things that could happen to create a bigger issue. And Craig, you also mentioned in there the supply chains, and something I know you saw, and I'm guessing many people who watching right now may have seen, is that Josh Fair of the Scottsdale Mint had a tweet last week and also did a video where he talked about how the refineries for silver are now backed up by 3 months. And he talks about how the dealers just keep buying back so much silver on the retail level, which is then being melted down. And this is the part that I find interesting. We're already running a deficit. You've had a lot of retail silver selling over the last year and a half. But it seems like that's all going to feed industry, which makes me wonder, well, if we ever get to the end of this wave of selling, if we're still running a deficit, even with that metal being used, and now you're not going to see the COMEX or the LBMA or Shanghai inventories come down, but what often gets left out is that the other big chunk of the inventory is all this silver that has been purchased by retail investors, especially since 2008, obviously before that. Fortunately, I have not yet found anyone who even can venture a guess yet of how you would get any indication of how much has actually been sold. But some amount, the supply is coming down, which if you get to the point where the selling stops, let alone if you have
Reverses.
buying come in, where does that leave the deficit? Which I might add, Silver Institute had a report out that just about an hour ago where they're expecting another large deficit in 2025. And we're on track for an issue. There's time left on the clock, but as you and I and others have talked about, there's not money going into the mining sector, especially the junior side. So it's not like we have all hands on deck rushing to get all the silver out of the ground. And it'll be fascinating to see how it all unravels. I mean, you see where it's heading. Things can change. We had that we're running a deficit from 1990 to 2005 in silver, bringing the inventories down. Then we got a little better at getting silver out of the ground. I don't know that that's on track to happen again to that scale, but certainly to see all this happening in that background, it'll be an interesting year for sure.
Yeah, you say that the fuse is lit. We just don't know if the explosion comes this year. But like you said, I mean, if we run another couple 100 million ounce supply deficit here in 2025, we'll be pushing 1 billion ounces over the last 5 years. And like you said, that's been mediated to some extent by, or mitigated to some extent by the people, selling grandma's candlesticks and her tea set. And some investment silver, obviously, too. People that I bought it at 26, 10 years ago. I'm finally getting my money, that kind of thing. Eventually that runs out. And if the supply for industry continues to fall and the supply from retail begins to cut off, at the same time, maybe the retail demand does a U-turn. That moment's coming. I want to just shift back the focus to gold and what.
Actually, I just add one comment on what you said there.
Go ahead. Yeah, please.
I mean, that makes a lot of sense. And I've been surprised, the dealers I talked to, it has not ended yet in terms of that wave of selling. Initially, I thought a lot of those sellers were probably people who've been bought at 15, bought at 20, been sitting there for the last 10 and 15 years, or saying, all right, $30, I can finally get out ahead. Although most of the dealers I've talked to, they say it's people that need cash.
Yeah.
So we'll keep an eye on it, and has not happened yet, but certainly whenever that does happen, how does that factor on? And we will see.
And to speak to Josh, I mean, I've known Josh Fair for a decade. He helped me on my TF Metals report side. I used to have the silver rounds, and his mint was the ones that produced them. I mean, he's a legitimate guy. I mean, Scottsdale Silver is a legitimate company. So it's not like he can just be written off as like, oh, yeah, he's just some blogger, doesn't know what he's talking about. So if he's seeing these kind of, these refinery delays, take him at his word. I want to, though, shift back to gold in our final minutes, because I just find this so fascinating. Even Goldman Sachs came out, remember, right before Christmas, and said that they thought the true level of official or unofficial or combined Chinese demand in November was actually 50 tons, not 5. And then their official report was 10 tons for December. Now we don't know what's going on in January. I just saw something from Coos Jansen got posted on GoldSeek that said, he thinks that their buying is through the roof. So if now already we're looking at a 4 to 8 week delivery delay out of London, and as you mentioned, India, China, and the rest keep pressing for more metal, what would a physical dislocation from price, would it kind of start out, do you think, with what we're seeing with these huge spreads between spot and COMEX that persist and widen? I mean, as we continue from here, I guess I have my long question, Chris. As we can continue from, what will you be looking for to think, oh boy, the whole system's starting to get a little shaky?
I mean, you could say that we've been seeing the signs of that for the past year or last year. Right? Interest rate cuts get delayed and the metals keep rallying in the face of that. Short position builds up, metals keep rallying. A lot of things that we have not seen. The relationship between yields and the gold price has changed. So,
yep.
Also, perhaps a bit early, but there, when I think back, all right, if you look at the London gold pool, what did you see before it happened? I mean, seeing a lot of the metal head to the east. So yeah, we're certainly, and when the things that you point out that you're adding on top of that now, it's certainly we're in that range where that's now a possibility. Similar with silver, when you're already in a deficit, you have these other conditions, you throw a few more things on top. You don't know for sure until it happens, but certainly like now it's a possibility. Before we weren't on the field. Now we're on the field, it's a possibility. And I know ever since the BRICS summit, it's almost as if you haven't heard much conversation about that. Although I will add that in reviewing that, did go back and listen to some of Pepe Escobar's interviews, and he actually mentioned before the summit that in terms of actually seeing an implementation of what he's described as the unit, which I might add was included on the BRICS Pay website, so not just Pepe talking about it, but he was saying that it's a process, similar to how the euro took many years to bring it into existence. He gave the date of when he actually saw something like that being implemented around 2029 or 2030. So I know people felt like the summit came and went, nothing happened, so we forget about it. But you could very well have another year. What if more of the BRICS nations have more of an emphasis on buying gold this year than last year? We don't know how that will shake out, but you like you point out, you have a fragile situation and a lot of things happening that have the ability to do some damage, and we'll see, especially these next weeks and months. But I have a feeling the tone in the metals the second half of the year will probably be a lot different than what we've seen these past couple of months. And as some of these things actually start to happen, I'm expecting a good year for the metals this year.
Underpinning all of that is the U.S. economy. Another Fed meeting in a few hours as we record this. How might that impact the precious metals on top of everything we've discussed? You got some thoughts on the economic and monetary policy?
Yeah, well, I mean, it's going to be fun to watch. What did Trump say last week? He knows interest rates better than they do. He wants lower rates. Are they going to listen to him? He says yes. He also says inflation is too high, and he wants to bring rates lower. Inflation's already accelerating. I guess the simplest way I could put it is that the Trump policies, if implemented as advertised, in terms of for decades we've been talking about they kick the can down the road, it's at least on track to significantly shorten the length of road that remains.
It's a good way to put it.
Let alone if we, the reverse repo tank runs out, we have debt ceilings coming up and all of the other things. My guess is we don't get too far into an overt recession because we've seen what the Fed will do. Trump is back, but we've seen in general what the White House will do. And I would think if the Treasury market is on the verge of dislocation, are we going to have the Fed and the government do stimulus or watch the thing fail? So I don't think we're going to see them stand by and watch it fail. Whether you could make an Austrian economics argument that certain things should, I don't think we'll see that. And man, that's I guess it's been a tough spot for the Fed for the last couple of decades, but everything that's happening is squeezing the vice here. And that's why it's, at least in my lifetime, I don't remember another year quite like this in terms of what could happen, what's happening now, and what that could lead to. So, yeah, it's going to be fun to watch, though.
You make a compelling case. Just keep buying some physical gold and silver. If you have to ask yourself whether you've got enough, that's probably a sign that you don't. So with all these things taking place, you might want to think about adding to your stack whenever you can. And you definitely should think about following Chris Marcus. Chris, tell everybody where they can find your work, not only on YouTube, on X, and every place else, Substack, etc.
Well, you can find us at Arcadia Economics on YouTube. I think I'm actually Arcadia Economic. The S did not fit on Twitter. We also do a Substack now at goldandsilverdaily.substack.com. So for people who like to read in addition to watching video, try to keep it short, but give someone a good overview of the key things that are happening, a lot of which we discussed today. And but I mean, I think it's, for gold and silver investors who have been studying and thinking about this for decades, I don't think it's that far a day off anymore. And so anyway, if you want to stay up to date on that, and we're covering it, and either case, it's just great to be here with you again, and appreciate all of our talks over the years. You've been one of my great teachers, and just always fun to catch up with you.
Well, thank you for that. And again, as I always say, times like this, you got to have as much independent, objective information as you can get, so you don't get led astray by just the mainstream narrative. Your channel, the information you provide, the guests you have on, just must read, must watch stuff. So
we had this guy Craig Hemke last week. I mean, that was just godlike. The
I don't know about that guy. You might want to keep your eye on him. His future is definitely limited. But keep an eye on Chris Marcus's channel, that's for sure. And as we wrap up, keep an eye on the Sprott Money channel. I mean, we're done with January, but boy, we're going to have an exciting month of February, that's for sure. Not only in terms of content, but always great deals at sprottmoney.com as well. So like, subscribe, wherever channel you've been watching, listening this, and then favorite that Sprott Money page for insights all month long, but also great deals. And again, remember, in your retirement planning, RRSP up in Canada, IRAs down in the U.S., visit sprottmoney.com. They can help you get some actual, real, sound money in your IRA to protect you against this monetary madness. It just seems we're getting more crazy by the day. Chris, thank you so much for your time. It's always such a pleasure to visit with you, and I hope you have a great rest of a Fed day and a great rest of your week.
Appreciate that, Craig. Always fun to see you, and thanks for having me.
From all of us here at Sprott Money, sprottmoney.com. Thanks for watching, but again, keep an eye on this channel for a very busy month of February.